I don't like webinars. There's no applause, no human interaction. Can I have some applause? Thank you, thank you. Okay, very good. So sincere and genuine and spontaneous. Anyway, I'll get started. Personally, structured warrants, they're my favorite child in the retail equity derivatives basket. And before I was an issuer, you know that I was trading since I was 21 years old. So I am very, very technical. I'm very in the market. I'm not trying to sell you anything. I have no courses to sell, no books to sell. But I just think that warrants are very beneficial to somebody who has very little capital and wants to maximize on leverage. So let's get this party started. Screenshots, this disclaimer, you can read it later, use it as a screensaver if you like. All right, so the main thing about today is I want to break everything down. Warrants are a very complicated products. They sound easy because they are cheap, right? Their absolute value, absolute price is very low. They start at half cent, 1 cent, so people think it's very easy to make, but actually it is not. So I want to break it down a tiny bit for you before we get started, all right? So our most valuable asset or commodity is time, right? So to save you on time, I want to teach you a trellis concept. So this trellis concept is something that is a trellis is what plants grow on. It is straight and orderly, and it's a framework to guide you on your learning journey. So the reason for this trellis, the existence for it, is so that plants, which is your learning, can grow and be lively and wild and creative. So what I'm going to teach you today is this thing, the trellis to trading. And the second thing that I want to cover today is a bit more on learning as well, which I think is very important, because I was told that this talk is mainly it's very beginner level, it's very retail, but I think this translates across all. I want you to question everything. So when you question everything, you need to ask yourself 2 questions. The first question when you want to trade is, so what? Actively ask, so what? How does this new piece of information on Supermax, Turbodynamic, G-Tronic, AirAsia, Trump, China, coronavirus, Brent affect my trading portfolio? Right? And the second question I want you to ask yourself whenever you consider any investment product or trading tool is, how do they make money? How does the issuer make money? How does the fund manager make money? How does the banks make money? How do stock market gurus make money? Do these stock market gurus that are teaching me how to trade, are they making money from selling courses or actually trading? Right, so how do they make? Apologies for my lousy handwriting today. I want to go really quick. So this is the reason that warrants are so fascinating. Everybody is so interested. This is the why warrants slide. As you can see, based on our Telegram, we actually posted this out. I posted it when Supermax was 168, 7 February, 168. 24 February, we posted another post in our Telegram, rubber gloves, 150, 168, then 158. Didn't really move so much. The reason that I posted at that time and our team, we decided on this particular counter before rubber gloves even moved is because technically it was doing this. Right? For those of you who are technical like I am, you would have noticed a rounding bottom formation over here and a breakout. And as you know, if it's a rounding bottom formation, technically, it is 1-1. Of course, it's gone 1 beyond 1 at the time, but the 158 that I posted over there was about here. After that, It continued to go to 397, continued to go to 763, but mainly it's the Y slide. These are the real returns that traders have actually made from trading Supermax C78, 8 cents to 2.99. As compared to Supermax itself, the underlying, which went from 158 to 763, which is decent. 383% is reasonable. It is something to pat yourself on the back. But 1,000 ringgit, if you actually put part of your portfolio into warrants, 1,000 ringgit, 3,600%. You do the math, all right? So let me address something really quick. So to those rumors that are on i3, talking about how issuers are losing money on rubber gloves. Oh, please, come on. Anyway, to successfully make money on warrants, it is a journey. So I always feel the more I prepare, the luckier I get. When I prepare, it means this. Preparation is trading skill. Preparation is also having the right tool for the right time. And in this case, it is warrants. On the bright side, if you're willing, if you're passionate, if you're hardworking, I'm more than willing to help teach. Yeah. Opportunity is if something like rubber gloves. And apart from rubber gloves, I like tech, which I'll talk about later as well. Because what's the point in talking about the past, right? I can't make money from the past. I'm looking at the future. What's happening now? June 27th until the rest of the year. What's going to happen? And of course, like I said, the more I prepare, when I'm ready for the opportunity, the luckier I get, the higher my chance of success. Oh yeah, and later on, I must mention that 2 to 4 p.m., I do have an advanced session for traders. And these traders actually made these returns, the Supermax C78. These are real traders. They bought it at 14 cents, if I'm not mistaken, and they were holding it past 3 ringgit. Right. So I have many people that come up to me and say, you know what, Isabel, what if I miss a rubber glove rally? It was once in a lifetime, once in a decade rally, because coronavirus, it's only happened once, unless it's coronavirus, COVID 2019, COVID 2020, COVID 2021. Touch wood, no. All right. What I want to show you is that there are other opportunities that existed in the past years besides rubber gloves. Hibiscus, 2019. See, so all of these things that I'm drawing over here, this is my version of preparation. I drew all of these things onto my charts, typed it out painstakingly. Whenever I see news, these lines were drawn by me. And if I did something as simple as this, bought here, sell here, support resistance, hibiscus would have made 14%, right? But if I actually knew how to use warrants and its leverage to my advantage, I would have made 50%. Next slide. Same thing as well. What if I missed the rubber glove rally and out of all these things you learned, Isabel, there are so many complicated terms that I will only be ready to put my money in 2021. Perfectly fine. For example, Public Bank 2018. Support, resistance, did your homework on the stock, knew it like the back of your hand, have a stop loss, right, at the bottom of support, as we all know. The thing is, warrants are very good for expensive stocks. As some of you may have noticed yesterday, we actually put this on our Telegram as well. IDSS is suspended in Malaysia until 31st December 2020. So what this means is that for a lot of retailers, they feel that stocks are going to get more expensive towards the end of the year because you can't short sell it. And that means when a stock is more expensive, let's say a $20 stock, the magnitude of gain that you get from a $20 stock to say $22, all right, see that? The magnitude of gain is very little. Makes sense? So if stocks may get more expensive, and it makes it harder to enter because of this thing that was just announced yesterday by Bursa and SC, I strongly advise getting familiar with warrants, or else we're gonna, I wouldn't say that here. Okay, same thing again. You don't have to have a bull stock to actually make money in structured warrants. Once you identify a pattern or a range on the charts, you'll see plenty of opportunities. Don't worry that you missed an opportunity and you feel that you have to chase. Let it go, okay? Like, you know the song. Let it go. Boasting slides, thank you. Kenanga, we are the #1 this year for equity warrants. That means equity warrants include DRB, FGV, Supermax, Top Glove, all of these local equity warrants. We are #1. Macquarie's great. They're great for index warrants as well. They have Hang Seng index warrants, which we do not have yet. But we do have really great FVMKL, CI, call and put warrants. Another boasting slide, first life matrix by a local issuer in 2019. Reason I'm putting it is because I have a great dress on over there. So let's simplify it now. Today is beginner level day. Warrants are very, very complicated, but they are very worth learning, as I showed you earlier. So I imagine today I want to share with you how I would actually recommend warrants, recommend trading strategies to my younger 21-year-old self, or my friends, how I would recommend warrants and how to learn how to trade warrants to my friends who have lost their projects, who've lost jobs, who need a second side income source during this COVID MCO period and are hungry to learn, but have very little capital. No harm in that. We can teach you, all right? So the big picture goes like this for me. Don't worry, I see Gavin Koda in the chat. There is an advanced level. I'll show you a bit more after this, okay? Have some patience. Not everybody's advanced as you. All right. So big picture. There are courses that you can attend. There are events, there are books, there are news apps. I like CNBC, GTN, and I love, love, love BFM. And research reports you can read, and there are trading gurus. But out of all this information, you can never finish reading everything. I've tried. I try to read 2 to 3 books a month. I go for 2 to 3 webinars a week, and I go for courses as well. I think since I've started trading, I've actually paid for at least 15 technical analysis and fundamental analysis courses, full-length ones. So you're constantly learning, right? You're constantly absorbing all of this crazy information, but what do you do with it? It needs to go here. You need to summarize it into your checklist. This is my own checklist that I've written. Isabel's Don't Be Lazy checklist with all the stuff about technical analysis. I can send it to you. If any one of you message our Telegram, I'll send it over. But you can read it. I find intro very important, moving averages, Japanese candlesticks, and I like Fibo and Elliott wave. So the second part of that is you need to have a scanner system. So a scanner system is very useful for generating buy and sell signals. SI Station, I like using that because this allows somebody who is as obsessive like me, who dreams of charts every single night, to actually program your own indicators. You have a lot of others. You've got Grand Pine's algo box that looks at fundamentals. You've got Art Trading System. You've got M.E.S.T., etc., etc., etc. The thing is, when people start using a scanner system, my advice is to not use it blindly. I think that is very risky. You need to actually know the background behind the scanner system. That's why you need this whole checklist of technical analysis. Or else the scanner system can also be fooled. It can have fake buy, fake sell signals, Wyckoff up thrust, down thrust, bull trap, bear traps. So please understand the TA behind it, the technical analysis behind it before you actually use these scanner systems. They are great, they are convenient. I love tech, but it's your slave. Tech is your slave. Don't let it do all the thinking for you. And finally, the outputs. Out of all of these things that we've looked at so far, you've got this part, all the inputs, you've got your checklist, you've got your scanner system. These are the only things that you want. You want your entry price, right? Stop loss price, take profit price. And instead of getting the stock, you would consider getting the warrant instead, using the M.E.S.T.I strategy, which I'm about to teach you. So the bottom line, out of all of these things which you've learned, right, this entire big picture of stuff, the bottom line is, can you make money using these things, right? So I am a very forgetful person, so I like writing all my own little notes on the screen. I'm not going to show you because I'm embarrassed of my messiness, but something that I like doing that I realize not a lot of people do. I like looking at, so the fundamentals, I like using the FATA system, right? Fundamentals first to choose a good stock, technicals to decide on my entry, exit, stop loss. So I will realize there are a lot of analysts that do all that fundamental work for me, and I know a lot of you look at them as well. Say this is Supermax. So I've got analyst 1, who has a target price here, for example. Analyst 2. Say analyst 3, okay? The thing is, I don't blindly believe analysts either. So what I like to do is I will actually go and plot the performance of this analyst and backtest him. Does that make sense? Finally, the juicy stuff. Warrant trading strategies. So you must know the M.E.S.T.I concept, M-E.S.T.I. You must have M.E.S.T.I, M.E.S.T.I ada M.E.S.T.I, all right? Only 2 issuers have a live matrix, Kenanga and Macquarie. And if you forget all of this, what I want to show you right now is this. So this is my our Telegram channel on Nagawarrants. It's called Nagawarrants by Kenanga. And it is live right now. I'm scrolling it. Yes? So you ever forget all of these slides? Because honestly, if I send you the slides, I know most of you will ask for the slides and you will never look at them ever again. So here's a summary of it. M.E.S.T.I strategy. Step 1, choose a great underlying share. You can use FATA, fundamental analysis, to determine if the stock's intrinsic value is below its current price. Then use technical analysis to determine whether it is a good entry price, target profit, and stop loss price. Second bit, M. M stands for matrix, live matrix. Only 2 issuers offer it. It is a direct feed from our market making systems, and it's a price table like coming from Macquarie shared with you earlier. But I'll go into a bit more detail of how you can use it in a smarter way as well. So first thing we want to touch right now is actually effective gearing. So it says over here, effective gearing. Inari C57, for example, you can see I'm looking over here. Inari C57's effective gearing is 3.28. That means if Inari itself goes up by 1%, Inari C57 goes up by 3.28. So a lot of people will say, easy, Isabel, easy lah. Just choose the highest effective gearing, correct? But no. Effective gearing is great for long-term traders that are not so worried about tick fluctuations. If you're a long-term trader, you want to, all right, let me describe it a bit differently. This time horizon strategy is slightly like your Facebook quizzes. You know those Facebook quizzes that ask you, which Star Wars character are you? Which Marvel superhero are you? So you need to decide from the very start, when you enter a trade, which trader are you? Are you a long-term trader, medium-term, short-term, or are you a day trader? The difference is all of these focuses, they all include components of the M.E.S.T.I. All of them must have the M, the life matrix. If you are a long-term trader, you'd be focusing on effective gearing. If you're medium-term as well, effective gearing. If you are short-term, you're looking at, I would like people to look at sensitivity, that's the ticks. See how important it is, the life matrix, to show you the tick sensitivity. Anyway, backtracking, right? Let's go back here. So once you choose a warrant with very high effective gearing, the problem is its sensitivity is very poor. This is our website, Nagawarrants.com. It shows the warrant scanner. And today, what do we have on? All right, Inari. Inari. Give me a sec. I want to show you something in the real world. For me, I don't really like talking about theory so much because I want to know something that I can use on Monday, you know? Trader style. I don't need a PhD in warrants. I just want to know how to make money, right? Okay. So Inari. First thing I would do when I'm on the Warrant Scanner page is sorry, I just saw a Q&A question that I really want to answer, but later. Have some patience, Isabel. All right. The thing is, say Inari C53, M, the first concept, the first acronym, the first letter of M.E.S.T.I just now, it meant that you need to choose the warrants with a live matrix. So I would choose these warrants. I would like this one, this one, this one, this one, because they're live matrices. So I know the price, the fair bid, fair ask price. So effective gearing, 907. That looks pretty great, right? Over here, 907. But the problem is, if I look only at E and I forget about S, M.E.S.T.I, 19 ticks. That's crazy. No, I don't want that, right? That means it flips very slowly. But you notice if I choose something that is too sensitive to ticks, say I'm choosing something over here, the effective gearing is actually much lower. Here it's 11, 10, 9, 8, and etc. But you see how there is a difference between effective gearing and ticks. There is the, what is this word? You need to balance it out. The goal is to have a warrant with high effective gearing, which is at the top range of the scanner, but have enough ticks to flip. That means they flip very fast, very little ticks. So you want high effective gearing and few ticks. You want a balance of these two. The thing is, warrants that are very cheap, they're very high effective gearing. So if you look here a tiny bit, sorry, market is closed, right? Warrants here are the very cheap range, and here they become more expensive. So warrants that have very high sensitivity, they tend to be very expensive. So I know everybody here wants low absolute price. So it's kind of a little balance game you need to do. I understand the balance between effective gearing, and I understand the balance of having sensitivity as well. I want high effective gearing and I want enough tick sensitivity. That means I want few ticks, right? But what does this ticks thing mean? So the M.E.S.T.I, we are on the S. When you look at a live matrix by Kenanga, you want to pay attention to these things. Firstly, you want to quickly eyeball on the color of the highlight, the traffic light. Green, good to go. Amber and red, if you're a beginner, I would say no. Avoid for beginner. But I know many of you are advanced as well. And the advanced people may consider a red, may consider an amber. Okay, green is, of course, everybody can trade that. But today I'm not going to cover, maybe during the Q&A, I can cover exactly how to trade warrants with an increased ask. But for beginner level, if you're in the pink section here, just avoid, stick to green. So if I was a beginner, the pink color guy, I would avoid this one already. And of course, I'll answer the question, what if I actually bought a warrant when it was green color and then suddenly it ran out of inventory? And then the issuer posts a low inventory alert. What do? I'm stuck. It was green and now it's yellow and suddenly it's red. I'll tell you how to do that later. Hopefully somebody asks me that during our Q&A later, all right? Okay. So Penta CL, how do I use this live matrix? What I really want to attack is if I want to buy Penta Master, number one, I already did my FATA on it, my fundamental analysis and my technical analysis on it. Number two, I must choose a warrant, right? So the accompanying warrants that perhaps I could choose would be this Penta CL. And what is this? The great thing about this gray and white. The gray and white lets me see very easily how many ticks this warrant has. All the ones in the white are 5. You can see, right, there are 4 levels. Here 4, here's 4, here's 4, here's 4. That means this is a 4-tick warrant. Well, maybe 5 with the exception of this one, but it's mainly a 4-tick sensitivity warrant. That's what it means. It means that this whole range, see how they're all the same price? We color coordinated the same prices. Make sense? Okay. So if I do want to enter into a warrant, what I would do is I would like to go for the highest possible price. If I want to enter, I would enter here. Why would I enter over here? When the underlying is 532, if I see a lot of sellers topped up at 534, I might as well wait until the sellers reduce at 534. So when I buy over here at 12 cents, it will immediately flip to break even when the underlying goes here, right? So here's the Penta, bid, Penta, ask, CL, bid, CL ask. I would have conducted my technical analysis, and let's say I do a Fibonacci projection, and I think that Penta CL, for example, this is not a solicitation to buy anything. I'm just saying, for example, I think that my target price for Penta is here for the underlying. I will know that, no, actually, you know what? Let me change it. Let me make it a bit harder for you guys. Let's say I know that my target price for Penta is 545. I plot there, okay? So I know correspondingly, the warrant on that day, for example, would be 13 cents. These warrants do get refreshed, by the way, so remember to keep refreshing them. If I can enter at 12 cents, and then I want to exit at 13, when Penta is at 545 on bid, why not? I just aim for 543. I can also exit at 13 cents, right? That's the beauty of the live matrix. It also lets me put a buffer. Hi, I can see all of you guys messaging me on my our Kenanga Telegram. Thank you, Nagawarrants, the best. I saw that. All right, later, all right. Where was I? Sorry, I get distracted. All right, so buffer. If I bought it at 12 cents here, let's choose a different color. Here. And my stop loss, I can use the live matrix to position a stop loss at, say, here 11 cents. Then I know that correspondingly the underlying stop loss is here, right? So even if it drops to 529, I know that I still have buffer before my warrant actually drops to that price. Yes? No? All right, I hope it's a yes so far. If not, if you really want, I can do, this is beginner level, I can do a beginner, okay? If you get enough people, enough friends, and you write to our Kenanga Facebook, I will do a beginner. If you want to do an advanced, I can do an advanced. I'm flexible. Okay, back to it. Everybody all right so far? The chat seem okay? I'm sorry I'm going very fast. I only have 40 minutes before the Q&A session and the Kahoot session, so I am a bit faster than I usually would. If not, I would look you guys in the eye and see whether you really understand. Okay. Yes, I can give the checklist on this. I can send the slides over. Maybe next week, let me beautify my drawings a bit for you, okay? And then I will send it over. So M-E-S-T, we've done the T already. S-T. All right, so T. Right now, we're using Pentamaster again. I've already decided that I, for example, want to enter Pentamaster. Okay. Reason for this, whatever it may be, I think it's fundamentally strong. Technically, there's a signal, or maybe my scanner showed me a signal already. Just now I mentioned all the fear vest and whatever, right? So let's say I'm using the SI station one. It has actually showed, for example, buy signal. Whoa, I actually have buy signals here and here and here. And okay, I want to consider entering it, right? It's alerted me and I look at it, I draw my own Fibo lines, and it suits my Bollinger Bands, it suits whatever you want to look at, right? And I already decided I want to go into Pentamaster. But to use a different vehicle to capitalize on Pentamaster's growth, because Pentamaster is a $5 stock now, I will use warrants instead. So I look at Pentamaster, I perform technical analysis on Pentamaster, but I enter the warrant instead. Okay. So when I choose to enter the warrant, what must I buat? I must look at M.E.S.T. and currently we're on T. If I wanted to enter this buy signal over here, or this signal, or this signal, you could buy wherever your heart desires, all right? T means what? T says avoid trading or holding a warrant with less than 1 month to expiry. Let's say a warrant has 6 months until expiry. Can your stock price, can Pentamaster hit your TP? Let's say your TP is here, okay? Can Pentamaster hit your TP in 5 months? So what I would do is, I'm a very forgetful person, I would draw all of these warrants as so. I know that CT only expires here, CL expires here, CO expires here, CL expires here, and I'll draw a red. You see that red part? That is the last month before expiry. So I kind of look at it and I say, Pentamaster, if I entered it here, because you need to remember that looking backwards on a chart is very easy. You need to actually remember that you can't see any of this stuff. When I'm here and the buy signal came out, I can't see any of this. I have no idea. Right? People who can't foresee the future, it's not possible, all right? There's just technical analysis, all of these things increases your probability of winning. It is not a guaranteed thing. It reduces your risk and it improves your probability of success. So let's say I entered over here and I'm looking at my time frame. Maybe I think, for example, person number 1. Choose a different color. Person number 1 here, he thinks that Pentamaster is going to go like that. So he would choose CT. Person number 2 thinks that C is going to go like this. Right? They can choose a different warrant. But the thing is, you need to choose the M.E.S.T.I strategy. This is just to explain the T part. Okay. Issuer. Last bit. M.E.S.T.I. Right? Can we use gearing instead of effective gearing? No. You know, I summarized everything into M.E.S.T.I. E actually stands for effective gearing. And effective gearing is gearing times delta. Delta is a very important component of warrants. I'll address it later, but that's why we use effective gearing. Jia Sun Jia. All right. So of course, let's quickly wrap this up. Choose a reliable issuer, cutting edge, approachable, reliable, very charming, very generous with her information, has some wisdom, has some insight into warrants, but is smart to know that she also can be very dumb, okay? Choose a warrant. Everything in warrants is very dynamic. So a website with a live matrix, I'm reading from here now, is best. A website live matrix, not an old screenshot live matrix. So Kenanga equity warrants, they come with live matrices. Our FBM KLCI index warrants, you can get the live matrix on our Telegram over here. And if you need a more slow, less powderful English Isabel session, you can watch the video, this 2-minute explanation video over there, okay? What else am I covering today before we wrap up? Common mistakes. Yes. Common mistakes, very easy. Common mistakes is when you don't learn from the mistakes that Isabel mentioned. Because trust me, I have made every mistake in the book. Common mistakes number 1 is when you buy warrants from an issuer with no live matrix. I mentioned the 2 issuers that have live matrices. So, second mistake under M is when you don't look at the gray and whites area. And then there's a lot of gray and there's a lot of whites, for example, in the live matrix just now. Right? Sorry, this is very time consuming. I shouldn't have written this. All right, there's a lot of gray. There's so much gray and there's so little white. That means it's a very slow to flip warrants. Maybe here could be 20 ticks. That's another mistake. You don't look at the gray and whites on the live matrix. Third mistake for M is you buy the red and not the green. I always say green. Hi, Akhil. Hi, all. Green, right? You bought the red matrix when it's at the high of the matrix. The red means that, the green means that the bid and ask is very tight, 1 tick apart. When it's red, it means that my left hand doesn't move. This is my left hand. My bid, the issuer doesn't move the bid. I increase my right hand. So when there's an increased spread and you're buying something over here on the high level of the ask, my right hand, it is risky. So for a beginner, stick to the green matrices. E. You want to look at E and S together. You want to buy cheap, yes, but you want to watch the ticks. The mistake comes when people buy the cheapest warrant, for example, a half-cent warrant, and they think when it flips, they'll make 100% because half cent to 1 cent, correct? But they don't realize that the ticks for this kind of warrants can be something like 50 ticks, 20 ticks. T. People forget about the expiry date. So my solution to this, see, whenever I give you a problem, I also offer the solution for it. Remember this thing just now that I showed? The blue color means the last 2 trading days before suspension. Remember that there is a suspension period before the warrant expires. Okay, so I just put that in blue just to remind myself if I really want to hold until the last possible moment. And oh yeah, just FYI for those who are asking the questions, even out of the money warrants, even if it's out of the money expiring, you can still sell it at a fair price before expiry. The thing is, once it crosses this line, then it expires worthless. So until this blue line, you can still sell a warrant that is very deep and off the money back to the issuer. And finally, I. The mistake about I, common mistakes, is that that traders are too shy to ask issuer questions. A lot of people, they call up my hotline. I get about 20 calls a day. I get 20 WhatsApps, 30 telegrams. They're too shy to ask questions. I'm all right to answer questions, but you need to do your own homework as well. Don't ask me things that, okay, ask me stuff, but if it's already on a telegram, please read as well, okay? And the only times I usually get calls from people, this is too shy. Some people who are too shy is when, say, they lose money, but then they never learned all of this M.E.S.T.I things, and then they blame the issuer for losing money because they bought a red color highlight warrant. You know, when people do stuff like that, it really hurts my feelings. So control the risk, that's the main thing I want to cover with this slide. Limited lifespan, we've already covered that. Warrants have a limited lifespan, meaning they expire, and the last 2 trading days that I showed just now, this thing, remember? You can actually lower the risk if you use the T in the M.E.S.T.I and draw it on the chart. If you forget, set a calendar alert. And notice that how I say you must always sell the warrant when the underlying hits the underlying target price. Okay, you would do technical analysis on the underlying, not on the warrant. And there's no need to hold until expiry. You just see the red zone when it comes across, hits your target price, you can sell it back to the issuer, no problem. All right, you don't have to convert it. All right, so limited lifespan, you can lower the risk. Leverage risk. Leverage means a small change in the underlying cause a massive change in the warrant, right? So my idea to risk manage this is to always have a stop loss and get familiar with technical analysis and basic support and resistance at least. So it's in the Isabel checklist just now that I showed anyway. So you can lower this risk as well. Currency risk, if the price of the underlying is denominated in a foreign currency, you'll be subject to foreign exchange rate fluctuations. And local equity warrants, they don't have such exposure. So I can say this for the warrants, Market risk, it's a market product, don't be silly. Yes, there is market risk. Liquidity risk, this is why you have a liquidity provider who is charming, reliable, approachable, cutting edge, who you can always call if you want more liquidity on a warrant. You want more on the bid, you want more on the ask, you call the hotline, you speak to somebody. So low liquidity risk. Defaults on market making obligations, nothing is impossible in this world, as we know, but it is unlikely with names like Malaysia's biggest bank, Maybank, CIMB, RHB, unlikely. Extraordinary events, Black Swan. If you like Nicholas Nassim Taleb's book, you'll know what I'm talking about. Possible. Everything is possible in this world. So finally, that wraps it up for me. Just some final housekeeping things. Thank you for your patience. In my advanced level webinars, where I will answer all of these things, if you like this session, please write to Kenanga Group's Facebook. The reason is so I can get allocated a budget to do more webinars. Okay, so in my bonus advanced level webinars, I've summarized everything. I've been an issuer at Kenanga since 2016, but I've only been speaking in public since 2018. And I realized there are a lot of repeated questions. So I've summarized all of my questions that I've received over the years here, and I've categorized them accordingly. Sorry. So let's say, all right, because if you're willing to ask, you want to learn, I know that was pretty beginner level, now it's advanced level. If you want to learn, I'm willing to teach. I get a lot of these questions. What's the difference between liquidity and turnover? I've structured it into these bits: structured warrants, strategies, warrant tools, live matrix tools, issuer, expiry, corporate adjustments. I realize these are the big themes that people always ask me when it comes to trading. Trading structured warrants. So I always get this question. I get this question a lot. How do I select warrants based on other money? Shouldn't I be looking at implied volatility, historical volatility? What else is there? Can I have a guided tour of the website? What do I do if I bought a warrant when it was green and now it's amber or it is red? What if I really, 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 really want to buy an amber or red warrant? If I win, does the issuer lose? Always a good question. That's the main question you need to ask about issuers is this one. I really like this question. What are the 3 ways issuers make money? 3 ways. We make money from the spreads, we make money from delta hedging, and we make money from time value. Corporate adjustments. What happens to my warrant? Okay, so these are all in advanced level webinars. We have a private chat on Telegram. You can message us there. It's Nagawarrants Issuer Team. I can just go to our website. Everything is on the top bar. We also have Nagabites. If you message Nagabites, N-A-G-A Bytes, and if you like the quotes that I've been sharing earlier, we send out a quote every single day, Mondays to Fridays on market days. If you message Nagabites, we will put you into our list and we will send it to you. So that is it. Summarize of everything that I've shared in the last few minutes. What do I need to know? You mesti tahu mesti. Oh, what an ugly color. You must know M.E.S.T.I. And you must know the website. Everything is there. Finished. Thank you so much for waiting, Shane. Thank you so much for joining us, everybody.